Time for Chart Attack, and a chart that will make you smarter, hopefully will also make you a little bit of money. Our closer brought a chart, actually gave us two today, that dig into what's happening in housing. And it really has a lot to do with demographics. Who's buying and who's not.
Who's buying, who's not buying, what is the average age of the home buyer. We've got, as we know, a near retirement baby boom generation. They're actually retiring. And who's going to be the replacement?
And the real issue, of course, is all the young people who should be buying have too much debt.
That's a big part of it. There aren't enough of them. They've got too much debt. They don't have enough jobs. The debt levels, though, as you see on the chart, a little bit discouraging, a little bit disturbing when you consider the fact that this is a New York Fed chart. Starts at 2004, obviously ends last year. Those are big, big growth numbers. And again, granted, we've got banks who really don't want to put the loans on their balance sheets, as we talked about earlier, as a problem. We've got a reduction in demand, but part of that reduction in demand is based on lower age demographics. And so you've got first-time home buyers are largely absent.
You know what's amazing, Josh, is I look at this. Look at the blue bars, all right? These are people, as you can see, ages 30 to 39. Right. They have got massive amounts of student debt. And even people, the orange people here, 40 to 49. I mean, even older people.
That's right.
This is unbelievable.
And now you can look, if you look at the blue, it speaks to the growth of that echo.
Yes.
Okay, which is interesting. But you also have to remember, this is not dischargeable. This is an issue that needs to be dealt with. It's not dischargeable.
You mean you can't walk away from it.
You can't walk away from it. You can't restructure it. You can't modify it. This is a real impediment to home purchase by these borrower classes.
Because obviously you can't afford to take on more debt if you're still trying to pay off your student loans.
Absolutely.
Yeah, this is a real crisis.
This is a real problem. And then when you start looking, as we said earlier, to the household formation by age quintile, you start realizing, wow, there really isn't the formation until you hit about 54 years old, at which point you see household growth. But that already has 70% home ownership rates.
By the way, we do have a second chart we want to get to quickly. We only have about a minute here. Take a look at this. Make sense of this chart and focus on the yellow line, the investment properties.
Right.
What's your interpretation?
So we've seen so much talk about the rebound and the recovery in the housing market. This is an important chart. What you see is that primary residence sales prices have increased in 2012 about 1%.
Right.
Investor property prices increased about 15%. So on a blended basis, yes, you saw good growth in home prices last year, but you really have to remember that's segmented.
Those are the wrong housing prices.
Wrong housing prices, and the investment properties are at the lower end of the home prices.